What's going on, everybody? It's Jeff here. Welcome back to the channel. So I wanted to take some time in this video to talk about short selling stocks. Okay, short selling is a crucial part to balance and equalize the stock market. And I feel like lately, because of the GameStop and AMC movement, short selling or shorting has just really gotten a bad rap, as if it's like a sketchy tactic that hedge funds do in order to drive the price down. And while there is room for argument that they are doing some sketchy things when it comes to AMC and GameStop, as you can tell by looking at the level twos and just looking at how equally and systematically they move as if like they're one stock together. Okay, and there's a lot of evidence, okay, and speculation around that. Short selling is a natural process of the market. It is very simple to do, and it is something that I do in order to hedge against my portfolio. And the reason why is because when the NASDAQ goes up 20% overall, it's very easy for your portfolio to go up higher than that, 40%. However, when the NASDAQ goes down 20%, if you don't get out right away and you hold, chances are your portfolio is going to be down greater than that 20%. Okay, so in order to be able to beat the market, which is why Warren Buffett says it's very, very hard to beat the market, you have to zig when everyone else is zagging. In order to do that, it is one, selling cash secured puts, selling covered calls against your shares, but also short selling. Okay, so in this video, I'm going to talk to you guys all about it. I'm going to show you how you do it. I'm going to try to give you an example of why it makes sense and why it's actually easier for you guys to short a stock when it's overextended than it is to find a stock that's ready for a breakout. All right, so stick around, guys. You're not going to miss this. For those of you that are new to the channel, all I ask is that you hit that like button and subscribe to join the family. If you're interested in joining our private community, it's the first link in the description. We have over hundreds of members over there. We go over all of this options data, short selling stocks, and any type of strategy in order to take your portfolio over to the next level. We have a great group of men and women, and some of them are absolutely phenomenal and wonderful investors that have been in the game for a long period of time. So if you're interested, check it out, guys. We'd love to have you. Let's get into the video, guys. First off, I just want to go over exactly what is shorting a stock. So short selling is a fairly simple concept. An investor borrows a stock, sells the stock, and then buys it back to return it to the lender. It's a very similar process when it comes to buying a stock. It's just the absolute inverse. The one thing that is needed, okay, in order to short a stock is you need a margin account. And the reason being is because you are borrowing the stock from, okay, the lender, and in order to be able to return it back. So you need a margin account in order to do that. Now, guys, let me give you an example of what it would look like, and then we're going to dive into the charts. And I hope that what I say really clicks and makes sense with you guys, that, you know what, maybe that you've been thinking about things in a little bit different of a manner, guys. So stick with me on this. So first off, guys, if you find a stock, let's say at $95 a share, and you can identify that it is insanely overbought, it has been run up way too much, you're looking at the indicators and you are seeing it is spiked really, really high, and saying, you know what, it's not going to last that $95 price, I want to short this stock. You are then buying, let's say, or selling 100 shares. Okay, you're borrowing them from the lender, you're selling them to somebody else, you're selling those 100 shares, and you are net short, is what's called $9,500. Now, if the stock price goes down to $85 and you have these, inevitably you are now net short $8,500. Okay, so what you do is you buy them back, okay, from anybody who's willing to sell them, return them to the lender, and you get to keep that difference, $1,000. Very, very simple. It's the same thing as buying at 85, selling at 95, but inevitably you're doing the inverse. You're selling at 95, buying at 85, okay? Don't worry about the mumbo jumbo of what gets borrowed from a lender, what gets returned to a lender. Just think of it that way. I'm selling at 95, buying at 85, okay? And you don't have to have any shares in order to sell the 100 shares at $95. So it's the same thing to do. Now, let me get into, guys, why this is actually can be easier to identify, okay, a stock that is overbought than it is for a stock that's going to be broken out. And I'm going to show you exactly how you do this. So let's jump over to this, guys. This is the TD Ameritrade Thinkorswim platform. I have used this for a long period of time. I was around investing in stocks way before Robinhood and Webull even came out, but it is a very simple concept. Inevitably, what you would do is you would just click on this, and instead of hitting buy, you would hit sell. It will go over the order, and it shows what your buying power is, what your net short is. You're selling 100 shares of Tesla. at 778. When the stock price goes down, I buy to close. Same exact process, just the inverse. You are going to need a margin account to do this, and you can do this, I believe, with pretty much every platform. I'm not aware of all the platforms that are available, okay, out there for other countries. However, in America, you can do this for any single platform. So it's very, very simple. Now, guys, let's get into why this is important. Now, we talked about already trying to manage, okay, your risk in order to maximize your gain, trying to hedge your portfolio in the market of a downturn. But let me talk about a stock, guys, that is absolutely ripped, okay, recently. TCAT, ticker symbol TKAT. It ripped from $1 all the way up to $75. Now, if we zoom in a little bit higher, when a stock insanely goes up like this, that cannot last. Okay, it has to come back down. Now, there is argument to say that there might not be shares to sell short, okay, as we have ran into that issue with GameStop and AMC, which is why there's been the huge conspiracy and talk about and evidence being shown, okay, that there are hedge funds using synthetic shares and naked shorts in order to be able to short this stock. But you as the retail investors, because unfortunately we do not have the power like they have beneath us, there are times you are not able to sell a stock short. But if you look at this, it is easier to identify a stock that is going to pull back than it is going to rip. And the number one reason for that also being is because by the time this happens, everybody is already talking about it. Okay, there's an old saying, when your barber is giving you stock advice, it's time to get out of the market. Okay, and what that really means is that by the time a barber is talking about stocks and giving you as the person in the chair stock advice, chances are everybody in the normal population, the normal, community is talking about stocks, okay? And the only time that happens is when the market is insanely overbought and it is ready to happen to a pullback, okay, guys? So keep that in mind. It's easier to actually find these stocks. Now, if you look at, I'm going to bring up another example. It's called Microvision. This is one I am bullish on just to show you guys. But to give you an example, I'll zoom in a little bit. The stock pulled up on news of Microsoft HoloLens having almost a $22 billion contract with the government. It ran all the way up to here. It ran 55%. Potentially that cannot last, okay? If you played on the inverse side of it, you would have easily had, even if you got out of it, at a quick range, you could have easily made 12% on your money in just a very, very short period of time. So guys, I know this was a very quick video, and I hope that you can kind of at least just take away from this that one, it's a very natural process, okay, of shorting a stock. It's not something that's insanely complex. It's the same exact as buying. It's just the inverse of buying, okay? The only thing that you're going to need is a margin account. And just like anything, guys, be careful what you get into. There are risks for shorting stocks like there are for buying stocks as well, and you can lose money. But the more information that you guys can learn about hedging against your portfolio, minimizing your risk, okay, selling cash secured puts, selling covered calls against your shares, turning your portfolio into an income generating asset, okay, like it should be, like the professionals do. This will help you guys really take your portfolio to the next level. So guys, if you have any questions, please, I know this video is very, very short, okay, but leave a comment down below. I'll be more than happy to help you out if I can. And if you're interested, guys, check out our private community. It's absolutely awesome. I'll see you in the next one.